O- Okay, let's start, guys. Good evening and welcome to our first weekly review. What we're gonna cover today, we will talk about our existing position, see
See
how
how
they
they
are
are.
performed, and also I will cover positions, all positions which I open in as a Discord channel. And answer your questions which you published. It's not too much to talk about positions because they're too young. We just opened a couple of days ago. But still, let's start. Let's start with our ladder. So we opened it 4 years ago. It's for DIT. Now it shows a small plus. Behave as expected. On Monday, we will open another tranche. Yesterday, market was down a couple of percent, and also VIX was up full 3 points from day when it was open, but it hold pretty well because our wide vertical work as it should be. So I hope that you understand this strategy, maybe not completely, but we will cover it on our training in details. But for now, what should you understand that we opening 4 tranches every week on Monday. Why on Monday? Because usually all crash happened on Friday and Monday. So if everything quiet, we can open a new tranche, and it's approximately the delta 10 short puts, 30 DTE, which protected with wide 500 points vertical long term. We will try in the future to do it 150 days to keep that vertical as long as possible, because we're gonna use it multiple times for as our future short puts. So that's how it's look like. Probably you already saw that everything fine, and I hope that we have big cushion there downside, so it should work very well. Let's go and see another one. Okay, it's our delta hedge. It shows small loss. It's expected because market is going higher today. Not much about $100. Just would like to mention, if you not familiar with this trade, so what we're gonna do, it's long term. It's 120 days till expiration. So in 30 days, we're gonna roll our longs 100 points down like this, and make it much less expensive. If you can see it from the chart, it's much less expensive. So our goal, we will move it one more time to try to make it free. And after that, we will probably open another one. So that's how it's worked. So it has a negative delta, slightly positive vega. It's exactly how hedge should look like, and cost small and protecting us quite well if market go down. But again, remember, guys, it was before named by COVID hedge, but it's not actually COVID hedge, because with huge implied volatility increase, it won't help. It's just a regular delta hedge which protect us for regular corrections, 5-10% maximum. Next trade, it's our Vega hedge, which we also opened 4 days ago. It's looks fine, shows small profit even. So we will talk about this hedge and my new way to manage it in our course. The goal is here, try to not to lose much when market behaving normally, because it's calendarized spread, and when market moving up, that hedge could be under pressure, but we shouldn't lose too much, maybe in whole life, maybe from couple of hundreds maybe to $500. But again, it depends when we open it. I'll show you next one, which has a big loss right now, and I explain you why. Idea is it's actually Vega hedge. We will have much more longs than shorts, and if event like it was a couple of weeks ago happen again, that hedge will definitely help us and protect our portfolio. Next trade, it's old hedge, and this is what I am talking about. Can you see it's $700 loss already? Why? Because it was emergency hedge. We opened it when volatility was extremely high. Any kind of hedge should be open when volatility is low. If it's high, like insurance, it will be expensive one, and when market bounce up, it will lose. It's exactly what happened now. But still, it's not a very big loss. Could be much worse, and we will try to get that money back when we're gonna roll our shorts to convert it to longs and make it with small credits. We will get that money back, I hope. And the last one, it's our violin trade, which we opened, I believe, 2 days ago. So it's in good shape right now. It's shows small profit, but it's longer term. We sell violin. It's actually our favorite delta hedge, plus couple of short puts together, and again we calendarize it and open our delta hedge long term. It's let's see, it's 150 days, and open 60 days short puts at delta 10, I believe. No, at delta 7. So we'll talk about it multiple times. I prefer to sell my puts below delta 10. Why? Because I believe that it's the best spot where any options speed of decaying the maximum when options is between first and second sigma. The first sigma is approximately delta 15. The second sigma, it's around delta 5. So anything below 10, delta 10, it's a spot where options losing very fast their value, and it doesn't matter how many days till expiration they have. They still gonna lose a lot. So that's why it's my preferable spot, and we will do it all the time in this range between 5 and 10 delta. That's how it's look. It's also like it's looked like our ladder trade, just longer term, but it's a little bit different because in ladder we use vertical as a hedge. Here we use a delta hedge, but they will perform approximately the same way. And how we're going to manage it, the same as we do with our delta hedge. In 30 days, if everything fine, we're probably going to roll longs of our hedge 100 points down and make our tail profit much higher. And we're expecting to make here, I don't know, approximately 10% in months or two for tested rate margin. For other brokers, it would be less. That's it. This is what we open here. We have that 1, 2, 3, 4, 5 trades. I go. Go away. Also, we open yesterday, I believe, we opened a ratio spread of oil. It's bounced, and we also in good shape. I think it's around zero right now. How we're gonna manage it, we will discuss later. It's my standard favorite adjustments for ratio spreads. Usually my first adjustment is I just roll down my short puts with increasing amount of them. For example, right now we have 4 short puts. If oil gonna go down, and right now it's at delta 9 approximately, if it will be somewhere about 12, I start thinking of adjustments. So I buy, for example, 2 of sold one and sell somewhere at 52, sell 3. It will be a debit ratio spread. So our tail profit will reduce a little, but position will be much safer. And if oil will continue go down and reach our longs, which is right now at price 66, the second adjustment will be roll down our long couple of dollars and use that profit from that roll to roll down as a short puts down. So it's gonna be like one here will be plus 4. Will be 4. Well, it's not gonna look like this because we're gonna make much more profit from our roll when when our long will be at the money. So, but you got an idea. This is how I usually manage my ratio spreads. We will continue move down and down until it stops, and if it's reverse, we slowly start lifting up our tail to make sufficient profit from this. Well, now let's talk about our old positions, which I opened in different Discord channel. We have, I believe, one position is a Nasdaq futures. I believe it's this one. Just a sec, let me check. Yes. You can see that it's out of hold, so it's right now close to zero. It's still long term. Oh no, sorry, it's 28 days till expiration left. So it's up to you who hold this position. You can close it actually right now and free up that margin to use for other strategies. But if you wouldn't like to hold it, to close it, you still can keep it for a week or two maybe we will reach our tail profit and close it after that. Also, we have positions, all positions here. It's November balalaika. It's in very good shape. It's already in plus, in profit. And again, it's long term. It's still 84 days till expiration. So I recommend to hold it, just thinking about close it already, because it's not potential profit. It's not as much as it should compared to margin it's hold. So I think it's a good idea to close it. Let's see another one. It's October position. It's the same. Also, we are in profit here, and it's also 69 days till expiration. Also, you can close it. We're already 1700 and plus, and the maximum profit, the tail profit is 3700. Cells left, and we have a December balalaika, which is also finally going to plus. This one we definitely have to close because it is 120 days till expiration. So not much to make, and lots of risk, because we don't know how market gonna behave. It's still nervous, and it's holding lots of margin. That's it. That's all our positions which we have, which I would like to cover. Usually in the future, we will see our positions, how it's performed day by day. But because we just opened it a couple of days ago, it's nothing to show there. That's why I just show how it's looked like right now. Let's move on, and I will try to answer your questions which you published. Okay, the first one. See where it is. Here. How do you do technical analysis? What indicators you have on your chart, and how do you analyze the charts? Well, you probably will be surprised, but I don't use much technical analysis. For me, price chart itself more than enough just to see is market oversold or overbought, where's a major support and resistance. But it doesn't matter. You cannot do this. If it's help you build your confidence and help to make a decision, use it. It's good too, probably, but not for me. I don't need that fancy indicators or moving averages to see what I already seeing from the chart itself. Question 2. When do you manage a trade? Rolling income trade out and down, based on data, based on loss, or something else? It depends on strategy, but usually I use delta, of course. If it's short term, it could be one deltas. If it's long term, it could be another. Usually I am not comfortable when my short puts going higher than delta 30, when it's even especially for long term delta 20, it's already point where I start thinking to do some kind of adjustment. Also, I always watch my portfolio bricks. I don't like when my total portfolio delta go above 0.3% per my net leak. And if it's going higher, I start thinking how to add portfolio hedges to reduce that delta. Also, what else I use for analysis? Let me show you. Probably some guys already saw that. I love to watch. Let me switch the screen. It's my IB, interactive broker. I love to watch structure of IV, how it's look like today versus yesterday and versus week ago, especially for low delta positions somewhere in this area. It's a warning sign, you know. For example, today, it's just an hour ago, IV of today's today IV of today options get lower than yesterday, but whole day it's hold and it was even higher. So it showed me that market is still nervous. Nobody closing the long puts as a protection. Plus, it's also a Friday effect. You know that market makers usually wouldn't like to give up very fast weekend theta, so they hold it and just the last couple of hours it's usually drop. And I always compare it with week ago. That dashed line, it's how it looked like week ago. Also, how I analyze it. You know, if market expecting some kind of significant news, it's understandable that probably some traders start buying protection and volatility of low delta puts start going up. But if it's not expected news and it's happened, it's a warning sign. It means that probably some big players know something which is not available for public yet. And I'm watching it every day to see if something unusual there. What else? Let's move on. How can we plan the sizing for 100K account? Ladder, violin, balalaika, and hedges. Well, guys, it's hard to give specific advice here because you know every broker has its own margin requirement. The only thing I can and want to recommend is to use no more than 20-30% of your margin for at least a couple of cycles. When you start understanding your margin requirements for different our strategies, plus you will be more comfortable with strategy itself, you can gradually increase your position. In general, probably we will keep our ladder about 30-40% of our total margin, which we're ready to spend. Maybe 10% will be some commodities trades and others it would be long term like violin or balalaika or something else. We will talk about this. And hedges, well, now we know everybody knows that we cannot live without hedges. We know it's must have it. We can lose our business. So we will slowly. I don't think that event like it was happened a couple of weeks ago will happen soon. It's pretty rare. But it's no rush right now. It's good time to start building that Vega hedge for our portfolio. Plus, we will have some other hedges like delta hedge. Plus, I will show you another hedges which I love, especially when I see that markets start declining and we don't know how deep it's gonna go and how long. It will be another very successful hedges which could be turned even in profit if market bounce up. So I'll make special course for that. It's gonna be probably the most important course for all of you. I'm gonna cover at least 6 different hedges, which is Vega, Delta hedge, soft hedges, hard hedges. All of them will be covered in details. We will discuss their all advantages and disadvantages, what kind of events they can protect, with what can't protect, and so on. Let's move on. Next question. Violin versus balalaika, pro and cons. Guys, it's actually pretty close strategies. We will do it medium term, I guess, and about 60 days. I did before long term, 120 days, but after last event, I don't like it anymore. You know why? Because not because it's more risky, because if market decline hard, after that we have to wait for so long till we will be out of hole, and it's also we will calendarize it how we did it here, because I would like to have one more dimension for adjustments, not just vertically, but also move our short puts out. It will be easier to manage, and I hope it will be much faster to go out of loss. But it's approximately the same kind of strategy. Balalaika use as a protection wide vertical, the same as we do on our ladder trade. But violin use our favorite already delta hedge. That's it. It's small difference. It depends how market behave. Violin is a little bit required little bit less margin, but little bit harder to probably manage. Not very hard, but little bit harder than balalaika. And it's up to you. You can choose, especially if your margin is tight, your account is not very big. You can choose one of them which you like more and stick with it. It's not big difference. Okay, next. 500,000 and 1 million account. Is it linear, or are there other factors to consider at the account size growth? Does broker margin behave differently? Well, I don't know, but I think the answer is simple. The larger the account, the smaller risk we should take. About brokers, well, what we found, especially 2 weeks ago, that, for example, tested trade, they have the smallest original margin, but they increase it so fast when market is going down. So you have to take in account this, you know. So I don't recommend with tested trade to go more than 40% margin of total your account size. With IB, it's much easier. I mean, it's much higher margin requirements from the start, but they don't increase much margin requirements during market decline. So you can go to 50 or even a little bit more than that with interactive broker. With Schwab, I don't know. I don't trade Schwab, but I think it's something between tested trades and interactive broker. Oh, what else? What are the warning signs we have to keep an eye on? Can we cover them during the call? Warning sign. How I said, I always watch IV structure. Also, warning sign for me is a big down move. I always watch 1 and 2 sigmas of 0 and 1 DTE options. Let's say that 2 sigma is about delta 5, how we know. So what is 2 sigma? 2 sigma, it's a probability that market will go there less than 10%. So it's mean that yesterday market didn't believe that it will drop so much. And if it does, it's warning sign for everybody. It means something significant happened and market outlook completely changed. It's big warning sign for me. And at that time, at the end of day, I start to take action. I can close some of my ladder positions. I can drop some additional hedges if that happened. That's my warning sign. Again, how I said, I don't watch much technical analysis. Well, I watch support and resistance not as a point where I start trading for bounce or something like that. I'm just watching if it's penetrated and stay below support. It's also kind of significant event, and probably it's possibility that the market continue to go down after that. So it's another warning sign. I remember mentioning that he looks an IV price of low delta puts. Yeah, I already covered that. I watch it on Interactive Broker. If you don't know how to set it up, probably I will shoot some video, put it on YouTube, and to show how I did already partially cover Interactive Broker setup on other server. I believe that guys already put it here also, but I don't think it was IV structure was covered there. So I will probably make one short and put it there that you can set up. It's not hard. Also, I plan to do a small video about Option Net Explorer too, because lots of guys start using it. It's very good tool. It's not good program, lots of bugs there, but unfortunately we don't have anything else available at the market, so we have to use it, and it's extremely useful for us for our strategies, because we do constantly we do adjustments, and it's very hard, even impossible, to track them with just Excel file. I strongly recommend everybody to use Option Net Explorer. But if your account small and you cannot afford it, that's fine. We will try to regularly publish screenshots from for our positions and put it in trades section that you can see it also. Plus, we will discuss it all the time. Go. Okay, how to set up and work with Option Net Explorer. I already said I'm probably gonna shoot a video. Which platform do I use? Well, I have my personal accounts. I run on Tested Trade, but I have a couple of friends for whom I running their portfolios, and I do it on Interactive Brokers. So I'm familiar with both systems. If you have questions, I will be happy to answer and help you. What's your target return per year, and what is suggested buying power to join your trades? Well, you know that return per year, it depends how market gonna behave. In normal market environment, I expecting from 2 to 4% per month. Sometimes it could be a little bit more, sometimes it will be less, sometimes it's gonna be nasty. We can lose something, but it's not very often. If we start protecting our portfolio, I don't think it's gonna happen very often. What the suggested buying power to join your trades? Well, you know that it's uh, we have, and they became pretty liquid already. It's micro futures also, so you can use our strategies even with 20,000, I believe 20,000 account size. But of course, this way you're gonna use only micro futures options. But and again, I recommend to start all of you to start with micro just to be a little bit more comfortable with strategies. Later, step by step, you can increase size or move on to just regular futures. Josh asking, you said that the bigger the account, the less risk we should take. But how can we define risk if we don't have hard stop losses? Ooh. I I don't mind if you have hard stop losses. I usually don't. I because I use uh, I use hedges and I don't think it's necessary for me. But you can. It's good idea probably to have stop losses. I don't know. Make number. I don't know, three times of your average win. Probably good number where you can stop uh, close that position. But I usually don't. Uh, I believe when you will be comfortable with strategies and with hedges, you gonna stop using them also because stop losses usually you close them at worst possible time. So usually after that you just don't don't like what you did. Uh, but again, it's up to you. It's up to your management style. Jay, I'm using tested rate. Is there good reason to switch to IB for cleaner margin requirement? Would you recommend such a move? Probably not. Just now you know what tested rate margin requirement is and how they behave. Just try to keep it smaller. Try to keep it 30%, and I think you will be fine. Don't forget that Tasty also have smaller commission. Other advantages, but I like IB. I use IB for years. Probably I switched to tested rate, by the way, just this year. All my life, 20 years, more than 20 years, I use Interactive Broker. I'm pretty happy with the platform. I know how to use it. It's very, very flexible. You can set up whatever you want, how you want it. And only disadvantages is high margin. But for big account, probably it's good idea, especially if you're not very disciplined, with margin. Maybe it's even good idea that when they keep margin higher, kind of protect you against big losses. What what with a delta hedge? after the first 30 days, what if we roll the short puts down instead of rolling the long puts down? Uh, I don't see reason for that. If you mean probably to roll shorts up, because our goal to make our hedge free. So probably you mean to roll shorts up. You can, but you won't get much from it, because our shorts too far and they're cheap. If you move them 100 points up, you don't get big credit from that, and you increase risk. I mean, you make your hedge softer, but you don't get much from it. Much more efficient if we roll our longs down, because it's closer and much more expensive, and that roll will give us much more credit. And just couple of rolls like this during life of this hedge, and we will get it for free, or virtually for free. If market going up fast, probably it won't be possible to do it completely free, but it will be very reasonable loss from this hedge. Uh, Looks like we done with questions. Uh, Guys, I would like to discuss our courses because it's a lot of questions. I know that all of you waiting for them. It's a hard work, and thanks to Gary helping me to make it as fast as possible. I hope that next one, the first one, which is our ladder strategy, will be available sometimes next week. About prices, price will be around 500 euro, but all members will have a discount from 20% to 60%. Discount will depend of your subscription. Of course, I think it's fair if somebody committed long term, for example, for 1 year, will get maximum discount 60%. If it's gonna be 1 month, it's gonna be 20. And don't worry if you decide later to switch to longer term subscription. I will refund that discount to you, of course, minus about 10% my processing fee, which WOP charging me. But I will do it for you. Don't worry about that. My goal that all of you will have that courses, because first of all, you will feel much more comfortable, and also it's tough, especially when it's too many people in our Discord server to answer simple same question again and again and again. And I understand that usually that conversation is extremely long, and it's hard for new people to find answers in that long chat. So they are asking the same question again. So better, of course, that they will get a course, and for sure it will be probably more questions after that course, but at least that questions will be harder and more sophisticated, and we will be happy to discuss them, that questions, and I will answer them. But simple questions, please try to get it from the course. It will be detailed course, and I hope that courses will change completely way you traded before. I already mentioned that, I use this kind of approach of trading for almost 20 years, and I'm pretty happy with that. I survived 3 or 4 different huge bear market, and I plan to survive another one and another one, and I hope you will learn how to survive also, because it's the main goal. Goal number one, it's protect your capital. Profit will take care for itself, but capital is what we have to protect. If, for example, how, I don't know, how Tom King recommend to close your position with stop loss, but you know, if all your positions will be stopped, you will lose from 30 to 50% of your account as at least. And after that, you need 100% your portfolio increase to get it back. And 100% profits, probably full 3 years of trading. So it's not good way to take care of your portfolio and your trades. We will learn how to do it right. That's it. Probably it's enough for today. Next time, continue to send me questions for next Friday video. And next time, I hope we will have more trades and our existing trades will develop a little bit more. It will be much more to discuss. And this video will be published on YouTube, guys. And for YouTube watchers, I will publish their invitation to our Discord channel. I just would like to mention that everybody can join us for free to discuss with other members in regular chat all what we're doing. Also, they can see all these weekly videos and can access VIP chat in read-only mode. And if they decide that it's right for them, they can always join us. It's not expensive. And that's it, guys. Thank you very much. I hope that you understand me well. I am very happy to start this server and answer and show you my way to do the business. Thank you very much. Bye-bye.